Hey everybody, one of the questions I get asked pretty often as an investor is if you could only buy one stock right now, what would it be and why? So we're going to get into that in just a minute. Before we do, please take a look at the link you see on your screen, fool.com/Frankel. Get a message from our sponsor, The Motley Fool. It's the best way to support this work we are doing on YouTube. Again, fool.com/Frankel. And I would want to go ahead and share my screen real quick. So the company that I would buy if I could only own one stock in my portfolio, I've said it a few times in articles, is Berkshire Hathaway. A lot of people might think this is a boring choice, but hear me out here. So Berkshire has three core business segments. They have their operating businesses, they have their stocks, and they have their cash. Warren Buffett's best known as a stock investor, and for good reason. Berkshire owns something like $300 billion worth of stocks. But there's a whole lot more to the story. So if you're not familiar with really the details of Berkshire, let's go through this real quick. So first are the operating businesses. Berkshire has over 60 different operating subsidiaries, a lot of which you're probably very familiar with. They're the parent company of Geico, the auto insurance company. They have a railroad. BNSF Railroad is a subsidiary of theirs. They're one of the biggest energy providers in the world, Berkshire Hathaway Energy. Duracell, if you have Duracell batteries in anything, you are a Berkshire Hathaway customer. Pampered Chef, NetJets, there's a bunch more examples. See's Candy, Dairy Queen, Fruit of the Loom. There's a bunch of different Berkshire subsidiaries that you may not have known were owned by Berkshire. Part two is the stock portfolio. So Berkshire has over 40 stocks in its portfolio. And as I'm recording this, the value is $301 billion altogether. So just a couple of examples, or a few examples of what Berkshire owns. They own 21.5% of American Express. They own 10% of Bank of America. They own a 2% stake of Apple, but don't let that 2% fool you. That is $74 billion worth of Apple stock that they paid a whole lot less for. They own 9.3% of Coca-Cola. A more recent one, they own a little over 27% of Occidental Petroleum, a big oil company. And those are just a few examples. There's more than 40 stocks in the portfolio. And it changes over time, but that's some of what's in it right now. And finally is cash. At the end of the third quarter of 2024, Berkshire had just over $325 billion of cash on its balance sheet. A lot of that's been raised in recent quarters. They sold about half of the Apple investment. It used to be a whole lot more. So they've raised a lot of that recently. Almost all of Berkshire's cash is invested in short-term treasuries. These pay about 4%. So not only does this give Berkshire, a giant stockpile of cash to spend if it wants to, it also gives the company, in the meantime, about $12 billion in risk-free investment income each year, just from the cash it holds. So that's a big part of the business that's worth knowing about. And I think the stock could be cheaper than you think it is. So depending on when you're watching this, but as I'm recording this, Berkshire has a market cap of just over $1 trillion, just over. So give or take a bit, but let's say use $1 billion for simplicity, or actually it's 1.01 that I used because it's the value as I'm recording this. So Berkshire's stock portfolio right now has a market value of $301.5 billion. And as I mentioned, Berkshire has about $325.2 billion in cash. So those two things are very easy to value. The stock portfolio is worth what it's worth, and the cash is just sitting in a bank account, or in treasuries in Berkshire's case. So subtracting those from the market cap, and we see Berkshire's operating businesses are being valued by the market at about $388 billion. So that's just what you're paying for, Geico, Duracell, the railroad, the energy company, all that stuff. That's the price tag you're paying for that. So excluding investment income, a lot of which comes from the insurance business, and the investment, the cash that I was just talking about, Berkshire's operating earnings are about $31 billion a year. So at the current rate. So if you use this with that valuation that I mentioned on the previous slide, this implies about a price to earnings multiple of about 12.5% for Berkshire's businesses. That's about half of the average S&P 500 company's valuation. And this is for a collection of what are largely recession-resistant businesses that have great management teams in place. They're, for the most part, they're very profitable. And so you can get this at a very, very cheap valuation, even right now after Berkshire's gone up so much. So the key takeaways here, excuse me, Berkshire is a very recession-resistant business, not only because of its 60-plus operating businesses, most of which are not that recession-prone. Like when you think of Geico, people will still pay their auto insurance in tough times. Berkshire Hathaway Energy, people still need to pay their gas and electric bills in tough times. There are some recession-prone parts of the business, but they're generally the smaller ones. Like Dairy Queen, people stop eating out as much when times get tough. But the big parts of the business are very recession resistant. Not only that, but the stock portfolio is designed to hold up pretty well no matter what. Apple has been one of the most resilient companies in the market. Even in bad times, people are still buying the new iPhone and they're spending money with Apple. A lot of evergreen businesses in there, like banks and Coca-Cola is a pretty recession-resistant business. A bunch of them in there, and the cash especially gives the company unprecedented flexibility to take advantage of bad times, not only to survive them, but Warren Buffett loves buying businesses when they're cheap. Right now, they're not. One of the reasons that Berkshire's cash has built up so much is Warren Buffett can't find anything that he wants to buy with it, stocks or businesses. The valuations are very high. He's put a little bit of money at the stocks here and there, but nothing big. So if, we get a market crash, for example, I hope we don't, but if we do, and stocks fall by, say, 20%, Berkshire's in a great position to scoop up some of their favorite companies at a discount. If we get into a deep recession and businesses start failing and business valuations come down, Berkshire's in a great position to make some big acquisitions if it wants to. But for the time being, like I mentioned, the cash is generating $12+ billion a year, and Buffett's happy to have that just sitting in the bank. Another point, one of the biggest pushbacks I get from my bullishness on Berkshire is what happens when Warren Buffett's not there anymore. And that's definitely a fair question. I mean, he's 94 years old. He's not going to be around forever. He could retire. It's not just he could decide he doesn't have it in him anymore and step down. He's already named successors, and they're not young, but they're definitely more, I'd say, have a more modern investing approach. They tend to embrace technology and things like that. The Apple investment didn't originate from Warren Buffett at first. It originated from one of the portfolio managers who are going to be managing money after he's gone. That's just one example. They're the ones who put Amazon in Berkshire's portfolio, who decided to make one of the first IPO investments in Snowflake. So I think that broadening the horizons of what the investable universe is, because right now the two investment managers have 20 billion or so of Berkshire's money to invest. If they get a lot more than that, I think it could actually be a net positive for investors, to actually be able to put that cash to use in more modern ways, I guess you would say. For now, I mean, no disrespect to Warren Buffett, he's a fantastic investor, but he's himself has admitted that most tech stocks are outside of his circle of competence. And just kind of to sum it up, Berkshire is like a diverse investment portfolio run by some of the smartest people in the world, in the investment world anyway, in a single stock. So if I had to sell all the stocks in my portfolio and just put it all into one, Berkshire would be the winner, hands down, no question. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.